Right. Okay. So I hope everyone is well. Um, Potentially a big day ahead with the FOMC. Now, the US dollar, come back to the charts, has come into a prior resistance. Now, for some reason, it's a respected level. We've had it respected here, over here, and again today. And we've had a move up into the prior lows, and we're coming down sharply again as we progress throughout the New York Open. So, whether there'll be any moves ahead of the Fed, we don't know. Personally, for me, I'd rather not be in any markets on Fed day until after the event. So, this is a semi broken bearish trend with that pop up, which broke these highs. So, on lower time frames, that is broken structure, but we're coming back in and across the board. That's giving us, for instance, the euro prospects of a move up against the US dollar ahead of the Fed today. So, in terms of the Fed, they're not expected to do anything with their interest rates, but a hawkish tone has been priced in to the market, which is supportive of the US dollar at the moment. But the data of late has likely enabled the Fed to hold off today and skipping until November. The November meeting will be highly important, and we have plenty of data before then. But for the meantime, the US dollar is likely supported, even though they'll hold today on divergence in terms of the European Central Bank that came out with a dovish hike last week. And then we have the Bank of England this week expects to hold, but the Federal Reserve, the more hawkish of those three central banks. So, all really depends on the rhetoric that comes from the Fed's chairman, Jerome Powell. So, in the statement and the dot plots will get ahead of him speaking. So, whichever way the dot plots and the statement go, we'll be looking for Fed Powell to confirm that sentiment. I mean, the more hawkish outcome would be that he emphasizes Powell a strong rebound in the economy for the fourth quarter. And despite there being progress made in both inflation and the labor market, um, he will emphasize that they both remain far from normal, and which will put the bias towards a continuation of interest rate hikes in the future and higher for longer. Whereas the more dovish outcome would be that Powell would suggest that patience is granted. Um, and subsequent of a hold in today's interest rate decision. So either way, we have a US dollar still. When we go back to this dollar, that is still plenty of weeks in the green. So I'll just take off this. So what we've been talking about at the start of this week is a correction, noting this W formation and prospects of a move into the neckline over the next how many weeks that would take. But the bias for me is to be short the dollar. But it does depend, technically, but it depends on the outcome of today's meeting. So whether we get a hawkish hold or a dovish one, for me at the moment, I'm looking for a dovish rhetoric from the Fed to enable us to continue shorting the US dollar. And for me, the line in the sand at the moment is down at 104.43. We're testing prior highs over here, which now turns into resistance. Considering how we've started out this week. So we've started out this week offered, and this old resistant is now acting. This old resistant is acting as resistance again. So let me know, guys, if there's anything you want me to look at. I've got a question here for euro dollar. So with the euro, we have broken structure to the downside, and we've come back in to this area over here as resistance. So we've come up into a resistance area, and depending on the outcome today, if we get a hawkish hold, then the bias is a continuation to the downside. But a dovish outcome would give us prospects of a move into resistance, breaking resistance to take on higher levels such as over here, into here. And that would be taking on the trendline resistance for a potential significant correction. Answering your question here, yeah, I mean, depending. What we need to be doing is rather than trying to second guess what the dollar's going to do and what might be said and so forth, it'd be much advantageous to wait and see what the outcome is, and then we can look at how the market reacts and build upon that to build a thesis for our own trading. So the dollar can do anything on the back of on all of the variables that come out off the meeting. The dollar benefits from risk on, risk off, and interest rate differentials, but it can be there are variables either way. So we don't know what the outcome is going to be. So the interest rate decision itself will likely start to stir up some volatility. I think this time around, the emphasis will be more on Powell's his press conference, and what he says. Can you not see my chart, Von? Let me try and start again with the charts. Right, let me know if that's fixed anything for anyone that can't see the chart. I'm not advocating any trading ahead of the Fed. Blood wish. Okay, guys. So if you want me to look into any pairs in particular, I can have a look. Dollar yen, sure. So dollar yen, we are front side of the bullish trend. We haven't broken any significant levels as of yet to the downside. Higher lows, higher highs. So the uptrend remains intact. So until we break structure over here, the bias is to the upside. Nearer term, we've got a support here and resistance in here. We've come pretty firmly into support. Which is now resistance. We have a bit of support over here as well. So a break below this area here would be bearish, and a move below above the prior resistance over here will be putting the bulls back into favor. Right, so I think we'll leave it there. Let's see how the Fed plays out, and if there are any opportunities, obviously we'll be talking away in the chat room. But for me, on Fed Day, I don't like to be involved until after the event and see how the dust settles. Okay, guys, thank you for being here, and we'll see you later on.